Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, June the 13th. It's an FOMC day. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. We talked about it. Today was going to be a nice day for data. Across the pond, we got Great Britain CPI year over year at 2.4%. That's in line with expectations. PPI, producer price, input came in at 2%, expected to be 1.7%, and they revised last month's number up slightly from 0.4% to 0.6%. Core CPI out of Great Britain, which strips out food and energy, in line with expectations at 2.1%. And then we also got PPI output out of Great Britain, came in at 0.4%, slightly higher than the 0.3% that was expected. Then if we move over here, one other thing, industrial production out of Europe came in at negative 0.9%, expected to be negative 0.6%, but they did revise last month's number up from 0.5 to 0.6. Doesn't make up for the miss this month, but it isn't a huge miss anyway. They were expecting a negative number anyway. Anyway, here in the United States, we got PPI, which is Producer Price Index, came in at 0.5%, expected to be 0.3%. Core PPI, Producer Price Index, stripping out some of the more volatile aspects of that, like food and energy, we got 0.3%, expected to be 0.2%, so slightly higher than expected there. Now we saw on our CPI numbers, that's the Consumer Price Index, which we talked about. Are they passing that stuff on to the consumer? We saw a slight uptick on core CPI, but not necessarily in the CPI number. So we're seeing a little bit of inflation passed on to the consumer, but it's not making up for the deficit we're necessarily seeing on the other aspects of the producer being able to pass that on to the consumer. All right. Finally, we've got crude oil inventories. It was a drawdown of 4.1 million barrels, expected to be a drawdown of 1.4 million barrels. Now, if you're trading off the API number, stop it. Stop it. It is the AP lie, you guys. It is a voluntary survey, and these guys always jigger with the numbers as far as I'm concerned. When the poller calls up, they don't necessarily even have to look at any data to come up with a number. So they're just throwing numbers out there willy-nilly. Whereas on the DOE side, they have to, because it's the Department of Energy, it is a mandate they have to give actual numbers. And having said that, API was completely off their rocker on everything. Crude oil build, small Cushing drawdown, but gasoline and distillate build, where we found in the DOE, the drawdown of crude oil, 4.1 million barrels we talked about. Cushing, a drawdown of over a half or 500,000 barrels. Gasoline, 2.2 million barrels, expected to be a build of 1 million barrels. That being said, we also saw distillates as a drawdown as well. So we are seeing a lot of demand coming out of here. One thing to note, we are seeing production levels go through the roof with rig counts going up, U.S. production going up. As a matter of fact, we are almost at 11 million barrels per day here in the United States. That is massive. We are outpacing basically OPEC, what they're reporting, and we are catching up very close to Russia, who is the leading producer of oil in the world. We are right there lockstep with them, you guys. So our production levels really ramping up, but the demand side for both gasoline and distillates were rebounding from last week. Also a note, it is the first week or it's the first time we've ever reached these production levels for crude oil, and they spiked quite nicely this time here. All right. What was the one other thing I wanted to talk about? Oh, our production this month increased 100,000 barrels per day to get us to that almost 11 million barrels per day. All right. Enough about crude oil, but that is giving crude oil a little bit move to the upside, as we would expect with that big of a drawdown across the board. Production going up, but demand is obviously keeping lockstep with that. So that's driving crude oil higher. It should continue to make that move higher, especially if we're continuing to see some of these higher demands for gasoline and distillates, because the distillates are the things that are going into production of like plastics and things of that nature. We see that demand, that's on the manufacturing side. All right, so crude oil moving a little bit higher today as we speak, and then we can go on to gold futures. They're a little bit higher as well. Pretty quiet day. You know, I talked about this yesterday. I wouldn't expect to see a whole lot of jockeying back and forth, big moves anyway in these next 2 days, being yesterday and today, ahead of the FOMC, which is going to come out with a rate decision today. It's expected to go up from 1.75 to 2%, and that's priced in as about a 90+% chance of that happening. All right. Now, let's talk about Bitcoin. It's continuing its slide today. I threw in this little line here in the sand yesterday. We are below that. It could still be considered a tweezer bottom or a solid bottom here, even if it pierces through it and bounces back up. It pierced through it yesterday, settled just above that line in the sand, but we settle below this line. I think it's definitely going down there to that 58.80 level pretty shortly. All right, bonds, up 7 ticks. That's unchanged. That can be erased in a matter of minutes. Priced in for the Fed move. All that being equal, I don't think there's going to be a whole lot of surprises coming out of the Fed. They might talk about further increases down the road, but they might just leave all of that the same because of the uncertainty in the overall economic picture here and across the pond. All right, VIX unchanged. It's down a little bit. It is out of the teens still, which I'd like to see it go back up, but that's because we're really seeing no movement in the equities. Look at this kind of movement we've had at the beginning of the year. That was the fun stuff, right? Well, this is what we had in 2017. Well, I don't want to go back to that, which is starting to feel like those ranges, where a 100-point day in the Dow was a pretty decent day. Well, we've seen 1,000-point moves lately. So whether it's to the, from the exact extreme high and the low. Right now, kind of settling down into a bit of a range, waiting for the FOMC for the most part. We do have the NASDAQ. We're talking about this, remember, rotating out of some of the blue chips. When we saw those lags in the tech sector, we're starting to see some pops happening in the tech sector today, showing up here with the NASDAQ. Once it got above that Fibonacci extension that I talked about of this 50, yesterday we settled above there. What happened today? We popped again right to this trend channel lower level, which is lining up with the value area high. But if you're a bull, you want it to get back into that trend channel there, which looks like it might very well happen relatively soon. So like I talked about, settle above that. We're going to see a pop probably in the tech, and that's what we're seeing today. E-mini S&Ps haven't gotten above this Fibonacci extension level. It isn't as important as a level as the NASDAQ. I think the NASDAQ level is going to trump it because the NASDAQ has gotten above that major resistance. That was a pretty thick line in the sand to get through. They've done that. It kind of puts on the green light for the broader equity markets to start moving higher. But obviously, NASDAQ outpacing the rest of the equities to the upside today. E-mini S&Ps, yesterday we had an inside day where the value area high and the value area low were inside of the previous days, which was Monday. You wouldn't expect to be tighter than a Monday, but because of that FOMC, I think we're starting to see people wind down positions, shore it up, get hedged ahead of the economic data points. So E-mini S&Ps near the highs of the day, but still a pretty tight range. All right, on to some things that I've done. AT&T, I got blessed with a big sell-off today in there. So I was able to cover some of my strategies in my IRA and in my margin account. So let's look at the IRA. Remember, I do those trades in my IRA, or all these trades that I kind of do a synthetic naked. I go out and buy the first strike I can for about a nickel or less and create a spread that is okay for the rule makers who really just don't understand that nickel strike that I'm buying really doesn't create that much safety. But that being said, I went in and originally sold the July 36-41 call spread. So I sold the 36 calls, bought the 41 calls to define that risk with that nickel trade, if you will. And I covered the 36 calls today, left on those 41 calls because they're basically worthless. There's no sense in me covering that for the commissions. I might as well leave it on for a free stab at a massive rally. Don't ever expect that, but it could very well happen. So I left that on, bought the 36 calls back for 11 cents. So I sold it, like I said, for 34 cents, bought just back the one side of it for 10 cents. Slightly better than 50% of my max profit, but today was the day that happened. You can obviously see by the market making move, allowed a lot of that to come out. We also got volatility to really come out. That helped me as well. So over in my margin account, I did the same trade in a sense with 36 calls. Sold the July 36 calls in there originally for 39 cents, bought those back for 10 cents. Like I said, everything came back in today off of that move for AT&T, so I decided to cover that. No sense of trying to work that out for another nickel as far as I'm concerned, or a dime. MGM, I got a confirmation here. You can see this kind of created a bit of a top. It's in a very bearish trend here, as you can see here. Tried to make a rebound to cover that gap, failed, and we have since started sliding. Today, we are getting confirmation as of yesterday's top. Now, that's not usually a very great topping pattern because it's within the move, but that being said, we're seeing a lot of that happen where we get the down spike. I think that this might be the last straw for that. So I went in and with MGM Resorts, I went in and bought the August because we have really low implied volatility. I bought the August 30 puts in there for $1 in my margin account and in my IRA. So looking for that to come down. As you can see, the buying those 30 puts isn't much further below, but I think that if we just break below this value area low, I'm going to get that spike down to 30, maybe even 29.5 to test this low here. So that's the premise behind this trade here, okay? If we break above this area, I'm going to consider that a broken pattern and look to get out of it. All right, that's all I got for you guys today. Tomorrow's webinar is going to be a good one. It's on the put calendar and setting up for trades that have an expected earnings in our option montage that we're going to be trading this contract in, because that gives us the expectation of increasing volatility. I'll go through all of those ways to set this up and the ways that will increase your probabilities of success. Yes, you can find out how to do a put calendar online. I'm not going to lie. Get your options education by Google. It's not going to help you a whole lot in increasing your probabilities. They aren't going to tell you your strike location. They're not going to tell you what volatility is going to do to this. They're not going to tell you what delta is telling you about probabilities. I go through all of that step by step in my webinar, so check it out. Even if you're an experienced trader, I'm going to be able to give you tips that you are going to love and will save you a lot of math going forward. All right, so check it out at Pro Trader Strategies, and if you can't take that, take it easy.